first and foremost, him or her, any co-founders in the board should really understand, are they in the market for growth capital or for M&A, right? They should have at least a perspective. And right away, they could say to an inbound, thanks for your interest, but we're in growth mode, or heads down on building product. But if there's one sliver of doubt, then they really need to then start protecting themselves, in the sense that you don't want to spend too much time or reveal too much information just for an exploratory conversation. And so, be professional, right? You want to have both pace and momentum, but also you don't want to do these things on a 5 p.m. on a Friday.
Today, I'm honored to be speaking with Mr. Tom Schapira, CEO of Imagine Capital Group and executive at Wellesley Hills Financials, right, where they take care of M&A and capital raising activities for companies operating in various industries. Thanks, Tom, for being with us here.
Thanks, Bhavesh. How are you?
All good, all good. So if you just throw some lights on your journey in the investment banking industry, and how did you exactly start off, and your current roles and responsibilities?
Yeah, sure. So my career path into investment banking didn't start with 80 hours of work when I was after college. I actually started my career in strategy consulting. So I spent a decade with Andersen, which is Accenture, in their strategy group for financial services. After that, went to another consultancy called Kearney to help build up their FIG practice, before getting recruited into a private equity portfolio company called SunGard. And that's a legacy fintech for those in the industry. We sold it to FIS, which is a well-known core banking fintech today, and they're also in the payment space. This, about 10 years ago, I was doing a lot of work in this new field called fintech, and decided to start my company, Imagine Capital Group. The first chapter of Imagine Capital Group was actually to be a venture investor. So set up shop in Luxembourg, had an office in London and Hong Kong, and in 2019 started fundraising. And then in 2020 hit a huge wall called COVID.
Yes.
So I switched from the buy side to the sell side. Only 6 years ago, and that's how I entered investment banking. And so today I do a lot of strategy and advisory work through Imagine Capital Group, but I'm an executive with Wellesley Hills Financial. We are a mid-market fintech and insuretech investment bank, significant deep expertise in payments. We also have spikes across wealth tech, asset management, trading, cap markets, open banking across Europe, US, Israel, and some exposure to Asia and Latin.
Yeah.
So yeah, that's the journey. Wasn't straightforward.
Fantastic. So Tom, how do you see, as you mentioned that you actually have been working in the fintech and insurtech company industry, right, helping them with the entire complex M&A transactions. How do you see this entire cross-border transactions happening in 2026? What trend do you see this here?
Yeah. So first and foremost, you hear the American accent, but I'm in Europe, and so I have some visibility to things that if you're in the States, you don't necessarily get the opportunities to work on. But European, UK, Swiss fintechs, MGAs, insurtechs are great assets at reasonable valuations. And what you find is when they are looking for growth capital or running an M&A, when we're able to take the process, we're able to make that connections with both US investors, Middle East investors, and often they see those assets not just for cross-border expansion, but also as good buys. Vice versa, those issuers are interested in U.S. investors or GCC investors because they
Mm.
tend to pay a little bit higher than the traditional UK or European.
Right.
So there has been, I would say, I mean, it's always been cross-border between the two continents, but or across the regions, but you're finding a greater trend for U.S. buyers to make investments in Europe.
Wow. So how should founders basically handle these inbound acquisition interest? I mean, uh, I see a lot of hesitation. That sometimes they're not basically able to understand how to actually proceed or engage with these things. So how should they handle these things?
Yeah. So the biggest challenge for a founder, um, well, they have more than one challenge. You know,
Okay,
the first challenge is growing their company, right?
correct.
The second challenge is probably managing the team. And then they have the challenge of getting inbounds. It could be from investment bankers. It could be from venture capitalist firms, from PE firms. So they're being bombarded from all directions. One of the things to realize is a lot of inbounds is very just exploratory. So
Mm,
a founder really needs to um, professionalize the approach in the reply. First and foremost, him or her, any co-founders in the board should really understand: are they in the market for growth capital or for M&A? Right? They should have at least a perspective, and right away they could say to an inbound, "Thanks for your interest, but we're in growth mode, or we're heads down on building product." But if there's one sliver of doubt, then they really need to then start protecting themselves, in the sense that you don't want to spend too much time or reveal too much information just for an exploratory conversation. And so, be professional, right? You want to have both pace and momentum, but also you don't want to do these things on a 5 p.m. on a Friday. So, get the NDA in place, understand what does the inbound interest, what are they looking for? And then
correct.
before you kind of open up the books and talking about the secret sauce and
Mm,
and the
mm,
customers and so forth, even after in the NDA, you kind of want to understand, is this a financial inquiry? Is this a strategic acquisition inquiry?
correct.
Um, and then from there, you can determine, do we want to put a structured process in place, or should we lean on professionals like investment bankers? I always say, if you have an issue with the law, you go to a lawyer, right? If you have a question about investments, you should go to the expert in investment banker.
Correct. But how should it decide which one to go ahead with, like a financial buyer or a strategic buyer? So so there's always a confusion between these two.
Yeah. So um, there's two types of buyers: financial buyers and strategic buyers.
Mm,
A strategic
mm,
buyer could be a larger entity in the same field or adjacent field that are looking at your product, your services, your customers,
mm,
to bring in into their product market mix,
correct.
and that is a buyer where there's um, um, synergies for them to extract.
Correct.
And there could be some culture synergies. Typically, a financial investor is just going to be a private equity firm, a venture firm. They may have a portfolio in the play, they may not, but their ambition is really pure financial returns. They may use equity, they may use debt, they may use cash as leverage to grow your asset.
Mm,
But those are the differences between the two. But what it really means is not about whether you should go to a financial strategic buyer. It's how you determine the right fit,
correct.
and that's when you kind of need to run a more thoughtful process.
Mm. So Tom, help me understand what is the valuation realities, in fintech industry, or say for example, insurtech industry.
Yeah, well, valuations are very different than what they were in 2021 and 2022, and even within insurance is going to be very different than it is in payments. So it's a loaded question. But when we think about insuretech, then the question is, where in the insuretech value chain are they fitting in? Are they in the claims processing? Are they in the underwriting processing? Are they in the risk or the pricing? So each one of those, call it subcategories, will have a both revenue range for their enterprise values and for an EBITDA range for those enterprise values. I can tell you in payments, it varies immensely. Like any type of payment firm that is in that, let's call it the crypto space, they may run on a 30 to 40x EBITDA value or a 10 to 15 revenue value. But if they're just, let's just say money transfer, drops considerably. Could just be 4x on EBITDA, 1 to 2x on revenue. So you really need an expert to kind of dive in. You won't find this, using ChatGPT, Claude. You really need to kind of understand the industry a little bit better, and not just the public comps, but what the art of possible would look like.
Correct. But what's the competitive process here? I mean, how does things look like?
Yeah. So, often what's the hardest part is the experience, keeping the pace, keeping the momentum, and getting the best value and strategic fit and cultural fit for the acquisition. Now, this could be done internally, but it really requires almost a dedicated team. And when it's internal, sometimes it's hard to push the CEO, CFO, your boss to pick up the pace. So it's always, there's better accountability when you partner with another firm. The way that we run the process is when we engage a client and share our value proposition to them. Well, one of the very first things that we want to understand is, obviously the financials, right? Look at the prior history and what the historical growth and drivers for that growth, but also the 2026 or what that forecast is by customer, by product mix, by pricing, the cohorts. But we really want to then get down into the nitty-gritty of the business. And what you'll find is every buyer, and there's buyer categories, are going to value the company for different reasons. One may value the company for its customer base. Another may value the asset for its technology. A third may, in the financial service industry, may look at its licensees, its team, or all of the above. But across, I would say, those 3 to 4 categories, you're going to have alignment to either a financial buyer or strategic buyer. So we in that, call it first 45 days, create that value proposition, and it's multiple value propositions for a client. And in parallel, we now know who the potential buyers list are, and we'll put a list together. Could be as small as 25, but most likely between 50 and 70. And then we go to market. So after 45 days, we go to market, and this is where we want to allow the business owners to focus on the business and grow, because their metrics are moving, and if they pick up their head to run a process, they may miss that sale. So we always encourage the leadership team, focus on delivering, focusing on making your targets, and we'll be the first face to the market, to the PE market, VC market, and we'll take the inbound inquiries. We would have the data room. We would provide the details at a high level for buyers to make an initial hypothesis. And after a month of doing that, we ask for the IOIs, right? We get to see who's really interested, who's serious, who's qualified on the buy side. And then we open up the gates. We let them have management meetings. We set that up. So again, doesn't eat the management team's time. It's gated. They spend a couple days. And then we move that from IOIs to a smaller group called and get the LOIs. And then from LOIs, we get into some hard negotiations. And then we support our clients on the structuring. Typically, every buyer wants to put an earn out. So we'll help structuring that. And then it becomes the share purchase agreement, confirmatory due diligence, etc. And that whole process is about 5 to 6 months.
Wow. Yeah, I think M&A process basically takes a lot of time, and certain transactions that I've heard basically takes a year or so, considering the complexity of the entire management and rapport between the buyer and the seller.
Yeah, well, it depends on if it's a slow and steady process or if it's a competitive process. Depends on number of legal entities and the products involved and so forth, key man risk. So yeah, it can widely range. But normally for us it's a 5 to 6 month process.
That's great. So Tom, there's always a question around value creation in private equity portfolio companies, right? Pre-acquisition and post-acquisition. So what's your take on that?
Yeah. So flipping sides,
Yeah.
right? Now we're not looking at what does the process look like from the seller, but what should the process be from the buyer? And if you are a strategic buyer or a financial buyer like a private equity firm, so often, especially in the middle market, PE space, or even in the traditional financial services space, they look at the pro forma, they look at the financials, and they look at it from a financial fit, and then high level at the product fit. But typically, this type of analysis is really held in a closed group, typically in the CFO group, so it's corporate development. And they may ask a P&L owner or in private equity, an industry lead to validate a lot of the assumptions and so forth. But that's actually, I would say, not even the minimum. There needs to be a few more steps. One of the first steps is, what is the uplift we're trying to achieve? Because you don't buy it, for the asset. You want to buy it, and then down the line you need to sell it, or it needs to improve the holding company's enterprise value. See, so you actually want to bring in some experts that is within the organization, or in the case of PE firms, could be some expert consultants to look at it across the technology, look at it across sales, regulatory, legal, in the insurance space, it's claims, it's underwriting, it's distribution, and those individuals need to be ready, need to understand how much time they can spend, and there needs to be a discrete set of questions that will inform the due diligence. So one of the stage gates you want to have, like the very first thing you want to do on a buy side, is spend a few hours to determine whether this is even worth your time. So spend a few more hours. Then after that, call it stage gate, you want the buy side to spend maybe 2 to 3 weeks to really validate whether this opportunity is right for you. And then after that, then you get into a real DD process. You have to have a very DD process, not only just on the synergies across technology, people, product, and resources, but also using typically within an organization a value creation office, the technology office, the PMO office, to understand not only where have we identified value levers across a number of categories, but what's the execution plan to get to that? What are the resources to drive that? What's the timeline for those realizations? How are we going to track the before and after? So all of that goes into the buy side's due diligence alongside the larger confirmatory due diligence. And then after transaction occurs, there is actually then the value creation execution of the plan that was pre-hypothesized. And that way, buyers can try to achieve the synergies in the first 90, 100 days in that plan, and then what occurs within the next year, and then if there's any synergies left within from year 1 to year 2.
Correct. But Tom, with all of these things that we're doing in the entire M&A process and capital raising process, talking about private equity firms, there's suddenly this, and there was a positive hope towards this year in 2026, right? But suddenly, if you notice this couple of news going around in the last couple of days, with Israel and Iran and all Middle East thing going on. How do you see this affecting the entire transactions? I mean, because I slowly the whole world is basically getting into this entire conflicts.
Yeah. So I think we need to realize that we've been in a conflict era
Hmm.
for the past 18 months.
Right.
So 2025 started off with a lot of hesitations
Correct.
because we had the new US administration, we
Hmm.
had the new UK administration, we had the conflict between Russia and Ukraine. And what we saw was over time, and that's where the second half of 2025 showed, is the investor community, the business community, society has said we have to continue on with life. We
Correct.
have to continue on with transactions. And so I would say there was some in the investment community, there even though there's still uncertainty, we've gotten used to it.
Right.
And so I think even with the latest geopolitical challenges that we have,
Hmm.
there is this opportunity right now. While we have visibility and some not certainty, but visibility and kind of understanding of U.S. policies that we can transact. That window, I'm always advising it's a rolling 6 months, like gets things out the door.
Hmm.
But it could change. That's why the time is now to transact.
Fantastic, fantastic. Thank you so much, Tom. It was actually amazing talking to you. A lot of
Thanks,
insights,
Bhavesh. Thanks for having me.
a lot of learning, specifically in the investment banking industry, how this entire financial and strategic bias take place, and how do you exactly take care of all the inbounds, right? When you basically have to manage so many things at the company level. Yeah, so we'll basically wrap up.
Okay, great. Well, thanks for having me, Bhavesh.
Thank you, Tom.